From the trading desk of dailyforex.com, this is Christopher Lewis looking at the euro dollar pair for the upcoming Monday, July 23rd Forex session. As you can see, the markets are closed now. We're recording this after the Friday close, and Friday had an absolutely brutal breakdown of this pair. What's most significant about this, quite frankly, is the fact that it's not the candle itself, although we did close towards the bottom, which is always a bearish sign, but it's the fact that we blew through four supportive candles and poked through the two before that. This is the Sunday candle, so just ignore that essentially. Essentially, we had a double bottom, we had three hammers and a doji, and all of them gave way. The double bottom at this point in time hasn't completely broken down. It's still holding, but one has to think that it's only a matter of time. So the simple trade, of course, is to sell if we break down below the bottom. If we bounce, there's a good chance that the 123 level will hold as resistance now, and as such, I'll be looking to sell any bounce up there on the first week candle. And this even includes looking at short-term charts. Certainly, there's really nothing to say, but the trend is definitely to the downside, so there's really no question about that. And I still hold that the bearish flag that I suggested was there, when you measure the pole of the flag, it suggested a 1,000 pip drop. And since we have basically broken the flag, the bottom of the flag, the first flag before we came back and retested at 125, that breaks the whole thing down to 115, a level that I still stand by. There's nothing on this chart, and certainly nothing from a fundamental perspective, that suggests that 115 can't be had. Doesn't mean it has to be tomorrow, and of course there'll be rallies. But those rallies are simply going to be an excuse to buy the dollar at a cheaper price. Spanish yields are starting to rise again, as are the Italians, and Valencia actually admitted it needed a bailout from the Spanish government during the Friday session, and that's actually what caused most of this. And that is a clear sign that things are accelerating, and it certainly focuses the markets back on Europe. So with the market suddenly worrying about Europe and not the U.S. and the U.S. earnings numbers out of Wall Street, then it does look like the focus is going to be on the European crisis again. And if that's the case, then this pair really has nowhere to go but down. Again, any rallies, first sign of weakness, I'll be selling. Breaks the lows, I'll be selling. I do expect some type of reaction at 120. It's a large psychological number, of course. And a bounce from there is probably just an invitation to sell it again.